Off we go then with a question. We see it's a balance sheet, we get straight on year-end, acquisition, post-acquisition, and it's S's equity. I'm doing the middle S here, so I'm doing this company. I couldn't show you the whole balance sheet because I can't fit it in, but I just want their equity. So their equity is share capital, retained earnings, and other. So that's what goes in. Share capital, retained earnings, and other. Whatever goes into S's equity goes in here. So we just pop them in, 38, 56 and 4. I presume that at acquisition it's the same. And then I need to go hunting down the at acquisition then for this company from this note. Here we go, the retained earnings were 49 and other were 3. So 49 and 3, 7 and 1. So far, so jolly well good. So then we add up the at acquisition and that comes to 90. That's the book value of the equity though. I want the fair value, so I go hunting that. Here we go. The fair value of the net assets was 120, excluding a patent. So far it's 120, a difference of 30. I don't know what's caused that difference of 30 yet though. The identifiable bond assets of Petal included a patent which had a fair value of 4, and that's been excluded, so I need to put that in. So that's 4 goes in there, which actually makes that 1, 2, 4. Okay, so far so good. This had not been recognised in the financial statements of Petal, so it wasn't in the book value, which is why we've had to add it on. The patent had a remaining term of 4 years. It's telling me that to depreciate it, so it would be, I've got a 4, so it'll be 4 divided by 4 will give me 1 a year, and even though you can't see it, we've had it for 1 year, so 1 a year, we've had it for 1 year, depreciation is 1. So the 3 patent, I'd go put that to intangible assets. I'd probably have to create a new line, call it intangible assets or call it patent, that's fine as well. And then it says the remaining excess of the fair value of the net assets is due to land. So the other 30 here is due to land. Land is good news because there's no depreciation, and I'd go have to add on land 30 to S's land there. Super, okay, so that comes to 7, and now we can get on with the goodwill working. So, goodwill, fair value of consideration, fair value of NCI, fair value of net assets acquired, and that's the one that I know so far, because I've just worked it out to be 1, 2, 4. Fair value of NCI, he tells me, doesn't he? So that must be in here somewhere. It was 46. So fair value of NCI 46. Then I just need to know what I paid for it. We comprised cash of 94. Add all that down, and I get goodwill of 16. So go put goodwill of 16 into my SFP as long as there's no impairment and goodwill on acquisition is not impaired. Finally then, I've got to deal with this further addition. Before I can do the further addition now, I need to know what NCI was at the date of the further addition. So, as usual, at acquisition, 46, plus post-acquisition, we acquired 70%, I think. Can we just check? Yeah, we acquired 70, so NCI would be 30, so they would get, of that, they would get their 30%. 30% of 7 is 2.1, so at the year end, they would be at 48.1. Now, it's at the year end that this further addition acquired of 10%, so we are buying it off the NCI. So, further addition. Step 1 is always on a further addition, calculate NCI at the date of the further addition, which I've just done that's the 48.1. Then calculate the fall in NCI, which is the 48.1, you divide it by what that stands for, which is 30%, and you times it by how much it's going to fall by, which is the 10%, further addition. And if you do that, it comes to 16.03. So NCI has gone down, we just acquired 16.03. So the NCI at the year end then would be 48.1 minus 16.03, 32.07, that would be your NCI. Just go back to this further addition though. We've acquired 16.03 from NCI. We actually paid 19, which the difference of 2.97 then must be a loss, and that loss goes to other reserves, which is quite nice because that's what we can now go and do. So we've got retained earnings to do and now this other to do. Okay, so let's go and put H's figures in first, the easy one. Let's calm down. 2, 5, 6 and 7. So H is 2, 5, 6, H is 7. Now, other, I'm going to do other first. The other reserve is only this 1 here. So out of that 7, I'm going to put 1 here. And that's how much I'm going to give to S. We deserve our share, which is 70%. We deserve our share of 70% of 1, which is 0.7. And then finally, I need to take the loss on the further addition, which is this 2.97. That needs to go in there as well. There's a negative loss on the further addition. So far, so good then. Just got to finish off retained earnings as far as I can on this question. So S is retained earnings. Well, if 1 went to other reserves, 7 minus 1 then must go to retained earnings. Okay, bit of a tricky bit that. You do get used to it, to be honest. But you know, it can be a bit of a prize winner point, and that's what I want you to be, prize winners.